Mr.Alpaca, Fundamentals in 10 Minutes. LMND went public on New York Stock Exchange as of July 2020. Share price climbed to over $180 before it trended down to around $60 per share today, only a third of its peak price. So, is LMND a good investment? Established in 2015 and headquartered in New York City, LMND offers renters, homeowners, pet, life insurance and soon car insurance. The company has made it its core strategy to deliver customer satisfaction. Traditional insurance companies tend to deny claims of customers. Companies pay $100 to customers, it will be $100 less in profit. When LMND receives premium, it keeps 25% flat fee and reserves the remaining 75% to pay claims and reinsurance. Any money left over will be paid to nonprofits chosen by customers. This removes the conflict of interest and distrust between the insurer and customers. LMND has powered its business with machine learning. More than one-third of the inquiries and claims are handled by AI. AI Maya helps you with new insurance contracts, and AI Jim assists you with claims. Here is a video showing how fast and how well they communicate with customers. As shown in the video, massive amounts of data are generated in a process and enhance the artificial intelligence to provide competitive pricing and better service. This helps improve overall customer satisfaction and attract more customers. The flywheel turns and creates a virtuous cycle. You may notice from the video that the communication is very straightforward. There are no insurance jargons, hidden fine print, or long waiting time on the phone. The company's strategy appeals especially to customers under 35 years old. Millennials quickly adapt to the digital way of insurance subscription. It's easy, fast, and cuts the cost of brokers. They typically start with renter insurance and later add more coverage. The premium per customer increases as their assets grow. For example, 10% of condo insurance holders were graduated from renters.
And so a core plank of our strategy is to acquire customers at a time when we have a massive advantage, delight them so that they never leave, and then as they go through naturally recurring, highly predictable life cycle events, we grow with them.
Over the past years, both the number of customers and premium per customer increased steadily, which lead to higher enforced premium or IFP. IFP defined as the aggregate annualized premium for customers as of the period end date. It shows the company's ability to generate revenue in near future. As of Q2 2021, renter insurance contributes to 56% of IFP, homeowners 30%, pet 13%, term life insurance 1%. This shows a trend of LMND customers shifting to higher premium products. As LMND introduces car insurance, we will see more growth, as bundle discounts will be even more attractive to customers. Now let's talk about market opportunity. The insurance industry takes about 11% of US GDP and is about 5 trillion worldwide. Some of the largest insurance companies are doing over 100 billion a year, yet none of them takes more than 4% of market share. The industry hasn't changed for the last century, it is due for a disruptor. With AI technology, Lemonade has expanded its business in every US state and now a few countries in Europe, including Germany, the Netherlands, and France. Not all products are launched in each location. In US, for example, as of Q2 2021, at least one Lemonade product is available for purchase in each state. The revenue is expected to grow at a fast pace once more products are introduced. The company is also increasing its investment in Europe. So far, it has won a number of awards, including 5 stars for Best Product Quality at Moneyview Research, Best Product from Consumentum Bond, Best Score for a Digital Service Offering by Focus Money, showing a great market feedback. Future opportunity for Lemonade is presence in more markets, more products in each market, and more market share for each product. Now let's talk about financials. Since Q2 2020, the company has transitioned to a new reinsurance structure. Lemonade agrees to cede 75% of premium received and retain 25% on their book. For example, if premium received is $100, Lemonade gives $75 to reinsurer and keeps only $25. The reinsurer will pay $18.75 to Lemonade as commission. In case of a customer claim, Lemonade pays 25% of the claim, while the reinsurer takes care of the rest. Before the program, all $100 would be recognized as revenue, but now only $43.75 is recognized as revenue. That explains the revenue drop as of Q2 2020. Why did management decide to take the reinsurance? In short, it is about capital efficiency, risk control, and market expansion. Under US and EU regulation, insurance companies are required to set aside capital surplus in case they need to pay claims to their customers. Without reinsurance, younger companies like Lemonade would have to reserve as much as 50 cents for every dollar of premium received, known as 2-to-1 ratio. The reinsurance arrangement shifts most of that surplus requirement to reinsurer so that the surplus ratio for the company is only 7-to-1. This strategy limits its volatility exposure and enables financial model to be capital light. Unlocked capital could then be deployed in market expansion. We are now looking at customer count and in-force premium for the last 4 quarters. As we can see, both numbers are increasing. However, the losses are getting larger as a percentage of revenue. For example, by Q2 2021, for every dollar of revenue generated, Lemonade loses about $2. This company is bleeding. What is happening here? If we dig deeper into expenses breakdown, we may find a clue. Loss and loss adjustment expense is basically claim approved and paid to customers. Think of it as cost of revenue. It is usually around 45%. The surge in Q1 2021 was due to taxes freeze. This item can't be improved in near term. Sales and marketing is around 120% of revenue. As a young insurance player, Lemonade has to spend huge amount of money to establish reputation and trust among existing and potential customers. For every dollar spent to acquire a customer, it takes 2 years gross profit from the customer to just make even. As Lemonade gains more brand recognition, this item is expected to drop considerably. Technology development is around 30% on average. Q2 2021 surge was largely due to car insurance related development. General and administrative stables around 60%. Currently, profitability is not a top concern for Lemonade. The priority is to expand its market share and then reduce these expenses as a percentage of revenue. Overall, I believe the company has a good business model and market potential. If we look at its PS ratio since IPO, it ranges between 25 to 107. Today it stands at around 44. It's a good time to start an initial position if you have long-term vision about the company.